Now, as the first half of the year winds down, the NSE Industrial Goods Index took the biggest hit in the second quarter, down 10.7%, while the banking index and the consumer goods index followed closely. Chukwu, CEO of Cowry Asset Management, now joins us to review the NSE's performance this year and for an outlook of the next half of the year. Johnson, thank you for joining us on the show this morning.
My pleasure.
So, your predictions for the NSE from the beginning of the year till now are the realities that are happening currently at the Nigerian market, matching expectations and predictions by yourself?
Not exactly. I was thinking that by the end of the first half of this year, the market should still close positive. I didn't expect a major rally, but I expected that the market would close positive. Unfortunately, as we speak now, the market is in negative territory, about 0.7%. Basically, what has happened is that a couple of factors, mostly endogenous factors, that's internal factors. We saw a situation where the political environment became heated up earlier than expected. One was expecting that by the heightened political risk we're dealing with now would actually manifest in the last quarter of this year, at the earliest, the third quarter of this year. But interestingly, because the ruling party had challenges with their conventions, or what they call it, electoral processes, internal electoral processes, there were concerns about the survivability of the ruling party. And unfortunately, we do not have a very close-knit opposition party that is strong enough to contest for power as we speak now. That may eventually evolve over time. So investors became worried. Added to that fact is that the rate at which the U.S. Federal Reserve is increasing rates has also impacted negatively of Nigeria's investment climate. We've seen a lot of funds moving away from emerging market back to more mature market like the U.S. and Europe. We've seen some level of normalization of monetary policies by the European Central Bank. We've also seen the same thing. We're also seeing the same thing in the Bank of England. So we've seen both internal and external factors that actually we are not factored into, though we expected the political environment to heat up this year, but not as early as first quarter of this year. So those are the factors that have worked negatively against the market perception and market and investors' appetite for equity risk.
Now, for those who are watching, investors, particularly foreign investors who are looking at the political space, would you say that now they've gained some political clarity in terms of who the major players are and who, like we talked about the fact that there seems to be not to be a strong opposition right now, especially for the presidential ticket. So do you think that is that something that worries them, or do you think they have clarity at this point?
I think there are still a lot of concerns. One, it is sad, it is already defined who will run who will be the flag bearer of the ruling party. The challenge we have is how the ruling party will enter the elections. There are concerns. I mean, in the media, we've seen a lot of reports about the possibility that a reasonable percentage of number of key stakeholders in the ruling party might decamp. So that creates a high level of uncertainty about what will be the outcome of the election. Yes, the party has had a successful convention, elected new leadership, but you still have to contend with the concerns that a number of their key stakeholders might move to another party. And if that happens, the bets are all out off. The bets will be off on how the election will end. Until we see that whether they're going to stay back or move, and if they move, what will be the impact of their movement? Are we now going to have a strong opposition party that is in a position to contest for power? And then you can actually begin to hazard a guess on which direction the election will go.
Let's have a look at the index movement. But before we go into details of this, let's look at happenings at the markets yesterday. We saw the consumer goods index down, banking and industrial goods down, insurance index down. Where would you say investors are taking money to right now?
Well, I think investors are taking money to the fixed income market. If you look at the short end of the fixed income market, you see there's an expansion in yield. We now see a 364-day bills trading about 13.8%. Just about a month ago, it was trading at about 12.5%. So we've seen expansion in monetary instruments yield. And I think investors are shifting from equity market, given that the equity market today is rather 0.7% negative. And you can actually put your money in short-term treasury-based instrument at 13.5%, 13.8%.
Basically a flight to safety right now.
Yeah, it's a flight to safety. And it happens in an environment where you see heightened political or economic risk.
Okay, so at what point could we see a turnaround right at the middle of the year right now, and everybody's talking about, okay, what could move the needle? What would investors be looking to say, okay, fine, let's either buy into the dip or take a second look at many stocks that have had their values shaved off them and are right now very good, provide very good re-entry points into those stocks? I mean, so you look at some of the valuations and fundamentals, they're actually still quite strong.
Yes, I think we're going to see further corrections. It may not be, we're going to see oscillation of a few days of rally, weak rallies and weak corrections in the next couple of months. But as we approach the election period, we're going to see further depression in market prices. And that's when people should come into the market. And my take is this: as you're going to get to a point where political actors will begin to sell the assets, those assets will include equity assets, fixed income assets.
Oh, really?
At that point, including real estate, most of them are strong in heavy in real estate, so you're going to see a lot of real estate coming to the market. So, but subsequently, you're also going to see liquidity injection coming from budget disbursement, the three tiers of government trying to intervene in infrastructure to create excitement among voters. So you're going to see improved liquidity. But on the converse, at that same point, you're going to see a further pullback by foreign portfolio investors as we approach the election period. That will be a time when markets will correct, and then local investors can take positions in equity.
Yeah, but usually when foreign investors pull out, we know local investors always follow suit. I mean, it's been an unfortunate trend, if I can use that term. That's what always happens. Foreign guys pull out, the local guys follow suit.
Yes, but what we're going to see, that I'm not talking of a very savvy investor.
Okay.
Do you have one in mind? Do you have some in mind?
Yeah, my clients, I'm already talking to them. You have to be on the sideline.
So what are you telling them?
Be on the sideline and watch. We're going to advise you when to jump in. As foreign portfolio investors are pulling back, markets will correct negatively. And then that will create opportunity for investors, because the reality is that Nigeria is not going to go up in flames. At the end of the elections, the foreign investors will come back. And then for those who have the courage to go into the market at such low trough, then they will be able to make some good capital gain. I think come in November, from October, November, it should create a lot of opportunity for investors that are strong in heart, that have staying power, that are really sitting there for the next six months to 1 year to come in.
So,
if we look at the quarter-to-date figures now for the NSE 30, you see NSE Banking Index, NSE Insurance, the Consumer Goods, NSE Oil and Gas, everything is in the negative.
Yes, expectedly, all share the index is in the negative. And if you look at those sectors, I want to dimension them individually. The lady who just left here mentioned to you that in terms of production has dropped in terms of crude production, although oil price have remained, has improved. But you have to recognize that only Seplat is quoted of the upstream oil operators. The rest are downstream operators. For the downstream operators, they are really struggling. And what is happening today is that they can't bring in products directly. So they are all relying on allocation from PPMC, because at current landing costs and the fact that government is not paying subsidies, it's almost impossible to import refined petroleum products.
Okay.
So the downstream operators are not doing well. If you look at the industrial sector, you did mention industrial sector, we've seen a contraction in the Purchasing Managers Index to the negative territory.
Johnson, I'm afraid we're going to have to leave it there. We've had about 8 minutes. But thank you so much for your thoughts, and we hope that it will all pan out as you're expecting. Johnson Chukwu, CEO of Cowry Asset Management.